And hello everyone, welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and hopefully making money doing all those things. I say hopefully because it is certainly not a guarantee, and you can lose money trading this. I also talk about building expert advisors for the MetaTrader 4 and MetaTrader 5 platforms, and which also in theory will help make us more money as traders and help you become a better trader too. So with that, let's go ahead and get into the risk disclosure part. Oh yeah, I also want to remind you that if you like this video, then by all means hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And if you want to talk to me in the comment section, then by all means hit me up and in the comments, and I will respond to you as soon as I can. If you do put trading advice or something that's close to trading advice in the comments, I will delete your comments because that's not what we're here for. We're not predicting the future. We're not guaranteeing results. We're not doing any of those things because in my home country of the United States, that is illegal. So we're not going to be doing any of those things. We're also not going to be setting Lamborghinis on fire or doing anything weird with way too much money. It's no reason to set $250,000 on fire unless you just really just have no respect for money. But at any rate, that's also what this is about too. So here we go. Here is the risk disclosure screen. This is where we talk about the risks and you need to know about them. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. That's why I know what to do and what not to do. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And what's weird is that when I was a broker back in the day, about 25 years ago, one of the companies that helped put the firm I was with out of business was Forex.com, and that is where I also trade my live accounts with right now. It's through Forex.com. So let's talk more about me. This is tradingforexforprofit.com. This is my website. This is the platform I'm building for traders to help you become better traders. Just feel free to go here and build your own account and create your own trader workspace, and that way you can keep track of your strategies, keep track of which strategies are winning, which ones are losing, stuff like that. That'll be enough to get you on the track of what to do with your trading and helping keep your mindset straight. Here we are. Here is the my MQL5 platform or profile rather. Here is go to my products down here, and we have the two EAs that I've got set up right now. I will be improving these EAs. They're not quite as robust as I would like. They're very, very good, but they don't trade that many times in a year, especially when trading, especially with the euro versus the USD is as flat as it has been this year. It just has not been very exciting at all. Basically a range of between of about 200 pips. And we have not seen that as much action as we would like to get these tested in a more robust fashion. So with that, let's go ahead and get into the what's happening today. Oh yeah, also going to be testing a little bit more of a strategy on with my prop firm trading. This is the what is this? I've lost more than that. Yeah, I'm down 500. Not that. But at any rate, this is the June Traders Cup with Audacity Capital that I am taking part in. We have, for example, here's my trading history. I'm down about 500 on that so far, which is not inherently bad at all, considering 10 days in the week, 10 days in the month rather. This will be going on for the entire month of May, and we want to get this up as high as possible and possibly win some discounts and prizes from audacitycapital.com. And that will also give me the enough confidence to go in there and get another prop firm trading challenge and beat that challenge and get into becoming a professional prop firm trader. And that is really the goal here. Let's see, Forex trading. Let's get into Forex Factory and see what's going on this week. First, let's talk about this. Iran's response to U.S. proposal to end war has been sent through Pakistan. I don't know who the IRA is. It is the and that's not really mine to really care who the IRNA is. But at any rate, this is what we've got coming on this week. That's going to be the forefront of everything. They've been drawing back and forth all day today, so we'll see what happens. Trump has responded with, we've achieved 70% of our goals in Iran, and is implying that it's time to go get the other 30% done. Maybe, maybe not. I don't know. But we've got a lot of fun things going on this week. Nothing on Monday. On Tuesday, we have the Fair Ched nomination vote. Hey, how about that? We'll see what happens with that. They're expecting it to pass. They're expecting to pass Warsh, Kevin Warsh, I think his name is. So that'll be an interesting new change at the Fed. The first change we've had in the Fed in, 10 years? I think Jerome Powell's been there for about a decade. But at any rate, we also have core CPI coming out on Tuesday morning. That ought to be something to get the popcorn for, so to speak, if you like popcorn at 8:30 in the morning. We also have, on Wednesday, we have core PPI. So we're getting back on track with CPI and PPI coming out right after each other. So I guess they've all got everything caught up. The BOE, Bureau of Labor Statistics. Bureau of Labor, BLS? Yeah, I guess so. Bureau of Labor Statistics, good enough. Anyway, and then after that, we have British GDP on Thursday morning. Yeah, 2 a.m. So that'll be interesting. We'll also have U.S. core retail sales twice. And then lastly, that's about all we got. So not a whole lot of event risk activity, but there is enough to jar markets a little bit. So with that, let's go ahead and take a look at the weekly charts, because this is the weekly update, and we do this once a week and take a look at our weekly patterns and see if we can spot any patterns that may help us make more money. Right here, this is the U.S. 10. I'd like to talk about I'd like to start with the U.S. government 10-year yield, because this is what helps define whether or not a currency is weak or strong. And right now, the U.S. dollar is a fairly strong economy, fairly strong currency. Came down a little bit this past week, but by and large, it's still in a bullish trajectory. Not good for American consumers, but look what we've been dealing with the past few years. Between 2023 and 2025, 2024. I'm going to see if I can find out where 2022 is. Oh, I just passed it, didn't I? Excuse me. Let me see. So the weekly high close would be around right here at 4.33%, which is right where it is right now. So you could argue that inflation has really not, or that the bond yield just really hasn't changed much in the past 4 years, and that would be accurate. And then before that, we get into the quote-unquote days of COVID, and we can fantasize back to when it traded lower than that. Oh, that's 18. Well, that's still 3%. That's still not anywhere close to what it is today. So with that does we still have an inflationary type situation in the United States, as indicated by the rest of the bond yields too. I don't trust this. Whenever you see red like this, it comes down a little bit. But we're also, when we have red in the U.S. 10 and then green in the, we don't. Okay, the same thing. It's not as falling as quickly in the Japanese 10. That means that we're closer to having that the yen carry trade unwind. And with that, we're going to see these currencies coming down. With that, let's go ahead and get into the euro versus the British pound. And it's been a while since anything really big has happened here. We'll call it May of 2025. Where it went all the way up here from the favoring the euro, came all the way back down favoring the pound. Since then, it has kind of been, ever since about November of 2025, it's just been kind of in a range, not really going much of anywhere at all. As a matter of fact, we could probably draw a line right there. They call that a resistance point. I think it's a pretty safe bet. We could do that. Go ahead and do that right here. Horizontal line. That is not what I wanted. Style. On a solid line. 1 pixel. Oh, there we go. We do that. And text. Call it strong support. Strong support. Okay, so I'll put that right there and see what happens. So with that, we're looking at a euro to rebound is what we're looking for. We'll see if it breaks through that or not. And if it doesn't, then it'll be coming all the way down to here. We're going to have a big rally of the pound. So that will be fun. That could be fun. The DXY is right here. And again, it's totally range bound right now. Has been since June of 2025. Really nothing in the Forex world has changed since 2025, which is unfortunate because as we like for things to change like that. That would be a fun ride right there. 2024, I was not trading then, I don't think. Excuse me. I need to have an energy drink or something. So I'm not quite sure what's going on with that, but it is the DXY coming down means the euro versus the dollar should be going up because this consists of 57% of the DXY. I'm not sure how that's going to work out or not. The euro has been very weak lately, so not sure if that's going to work out or not. However, on dollar weakness, here's where you want to be: the British pound, and it has also been range bound since we'll call it. Let me guess, June 2025. Yep, June 2025. So everything's been pretty much range bound since June 2025. I don't know what happened in June of 2025, but it's everything's kind of stopped going all over the place since then. So everything's kind of range bound right now. The Swissy is not. May, June. Oh, yeah, it is. Because I've got it capped right here at 80.91. And then another stronger support at 76.83. So that's going to give us down at the lower end of the range right now. So we could be seeing a bounce back in that. I don't know why, but on a weaker USD, weaker DXY, the Swissy's going to be going down. So we'll keeping our eye on that. And again, not a whole lot going on. You'll see how wide these Bollinger Bands are and how narrow these Bollinger Bands are. That's an indication of volume. Also ATR being really high up here and then really low down here. It's an indication also of volume. So there's not a whole lot of money changing hands right now. So it's one of those times that we're not going to see a whole lot of back and forth in the currencies until something really big happens. Again, let's see what happened here. July 2024 to September 2024. That wouldn't have been the election. Well, that would have been the election right here. The American election, that is, when Trump got reelected. But at any rate, moving right along, we have the dollar versus the Japanese yen, and it is going great. It is coming down a little bit on dollar weakness, and also this week was more indicative of BOJ intervention, a slight intervention on the BOJ, not as big as this one, but it is an intervention nonetheless. So we're going to see what happens with this candle, see if it finds support against the yen. Even though on a weaker dollar, we probably will not see that. Because what we will see here is that's a nice pen candle right there, is the Great British Pound versus the yen at 213.59. That's about 50 pips higher than it was all week last week, all 5 days last week. So it tended to average out around 212.80 to 213 for the beginning of the New York market. So we'll see if that happens again. Euro versus the yen right here. Again, not a whole lot of anything going on with that. UCAD. This is a mess. This is one equidistant candle here, followed by another bearish candle, followed by an equidistant bullish candle. You know, if you really want to trade this, go for it. I've been trying to figure it out, and it tends to stay low in the range for a while, and then it bursts out, and it comes back down again. I don't know what to think of this. So the UCAD is just a mystery to me. I don't know of any way to trade it, unless you just sit here and glued to the screen the whole time, and then you're probably going to overtrade it and trade it manually. But that's not how I would like to trade that. We'll just say CAD versus the yen again. Usually following the oil markets, considering Canada is a big oil producer and exports most of its oil, and the Japanese import most of their oil. It's kind of correlation to the oil market, but not anymore. It's kind of peaked out at 114.55 and it's starting to come down also. It's now more interest rate bound. Here we have the oil market, the NYMEX. That's the one I like to follow. The WTI, I haven't found a reliable indication of what that price is. So I stay out of the WTI, the West Texas Index, which doesn't really matter as far as the price of gasoline goes, because we export most of our oil because it's a light sweet crude, and the heavy crude is what we need to turn it into gasoline, and lubricating oil is what we need for machinery in the United States, and so we import that. We export everything we've got to other countries that use this light sweet crude, and then we take in the heavy crude and turn it into oil and gasoline. In everywhere except California, because they're shutting down their refineries because they're going solar. Sure you are. Let's see, dollar Aussie versus the dollar right here. 72.46, getting a little bit up there again. So this might be a long fingernail biting type of trade right here. You have to go wide range, if any range at all. I mean, pardon me, if any stops at all, and just try to just hold on and bite your fingernails the whole time. That's not the way I like to trade, so I'm not going to trade the Aussie right now until I have a system that works out a little bit better. And I'm researching systems all the time, so that's who knows, maybe a little bit later we'll get into that one. Gold, all the glitters, all the gold in California is sitting in a bank in Beverly Hills, said the Oak Ridge boys many years ago. I don't know if that's true. I don't think that's true at all. But at any rate, the gold versus the dollar right here, and again, equidistant. What did we say this earlier? Oh, dollar versus the Canadian. That's kind of an interesting little thing. So we've got a bearish. What if there's a correlation between that? Interesting. Maybe so. Maybe not. But at any rate, gold versus the dollar is finally broke. So we got a weekly close over 4,700. We've got this great big true value gap right here. We'll see if it can fill in that true value gap and continue its way up to the January 2026 weekly high close. And that's the March 2026 weekly high close right there at 53.09. We'll see if that can overcome that. Gold markets. So we got gold perking up, platinum perking up, palladium not perking up. Palladium's down. And then we have silver perking up. Yep, perking up to about there. It looks like there's maybe more of a correlation between gold and silver than there is between any of the other metals. So I'll stick with that. Let's look at the software sector for a minute. Oh, look at that. Software sector's perking up a little bit. Just closed that trade value gap right there. We've got another one to close here. We'll see if we can get back up into somewhere around this range, around 96.96. In the meantime, look at this. HubSpot off 19% Friday. And that is pretty big. So this one has it off $42 on the week. Down $17.74 on the week. And I'm actually wearing my HubSpot t-shirt right now too, that I used to wear when I was doing selling for HubSpot. But that's again, they're having a really big issue with their AI. They brought AI on, jumped in it with both feet, totally forgot who their customer was and who was selling for them. And at the same time, they're starting to downsize bigly. So downsizing bigly means less staff, means less support, means less customer service, means less customers. And that's just how life works in the big city. It doesn't matter how much AI you've got. AI is not going to turn the world over. I don't think it's even going to disrupt the job market that much, although it did shut down my web development company. It will continue to do some disruption, but not enough to really... It's not going to create a whole new economy, or if it hasn't already. Let me see. Intuit. I'm also an Intuit customer. Is kind of waffling right there. GoDaddy right here. Kind of perk it up a little bit. Don't know what the tricks they have up their sleeve. It's another company that completely forgot who their customer is. Adobe, again, I'm an Adobe customer, and Adobe, in my opinion, has been doing the best with this. That I don't use their AI products at all. I still use Illustrator and Photoshop for my own graphic design needs, because I'm also a graphic designer. I might get some ideas from AI, but I don't use it to build them. NVIDIA right here up $16, up 8.25 cents, almost 8.5% over the last week. So we'll see if that continues. T15, Upwork. Wow, Upwork got hammered Friday, and on this one the range is down 16% on Friday. No, I mean the whole week it's down 16%. So Upwork is really. Let's see if there's any news on Upwork we should be taking a look at. Latest earnings report 2 days ago. Earnings call highlights. Here we go. 2 days ago, earnings call highlights. Market beat. Let's see what Upwork is saying. Upwork said the first quarter's results. Hayden Brown is still the CEO. Said the company delivered inline revenue and phenomenal bottom line results, including a $10 million adjusted EBITDA beat. However, management said demand slowed beginning in late February because they basically put this together for you. With AI killing small business, it's killing who people use AI Upwork for, which is hiring people for their small businesses. So with small businesses getting further taken apart by the AI thing, we're going to see this entire economy getting changed. And maybe I was a little bit quick in saying that I don't think AI is going to disrupt everything, because it does help me build faster. So with that, let's see, does that give me everything? Close that out now. So Upwork is not doing well. Yay. Target price cut to 15.22 implies 43% upside. Maintained by Scotiabank. Okay, we're not going to worry about that. Cut to neutral from buy by UBS. So see how long before they fall apart. They're pretty much going to have to rebuild the entire small business economy for that to happen, and AI is going to have to adjust or get pulled back for that to happen. But at any rate, that is about all I've got for today on the weekly look ahead. Again, a lot of things are range bound right now. We're looking for this to break out. I'm not going to touch Bitcoin because I don't like Bitcoin. Doesn't mean you can't make money at it, but that's not my cup of tea. We'll stop here at the US 10. US 10Y, and take it from there. Again, thank you for joining me. If you enjoyed this video, then hit the thumbs up button. If you want to see more of these videos, then hit the then subscribe to the channel, and I'll be more than happy to and YouTube will tell you when I'm putting out more of these videos. And lastly, if you want to talk to me directly, hit me up in the comment section, and I'll get back with you as soon as I can. In the meantime, you guys have a great one. Bye.